Hello, welcome, traders. How you doing? So I'm just gonna get some things buttoned up here. It's been a while since I've streamed, I know. So I'm going to get my beer of the stream going and just get the topics in my head going for a second. So just give me a moment here, and then we'll start talking. All right. Thank you. Alright, that looks a little better. Alright, so how you guys doing? I know this is a different atmosphere than what you're used to, so I'm in my office today. My garage is currently getting repaired. The roof is leaking, it's not good. So, I decided to stream in my office today. Hope you can hear me alright. It looks like everything looks like it's good. Hopefully the music's not too loud. So today's beer of the stream is the it's actually hanging off the side here. Hold on, let me adjust this. Beer of the stream is the blueberry lemonade shandy from Saugatuck Brew Co. And it looks like this. It's kind of got like a lemon head. I'm sorry, I'm trying to get this. There we go. It's kind of got like a lemon head on it with blueberry eyes. And this is one of my favorite summer beers. New this year, actually, to me. Saugatuck has a blueberry maple pancake beer that's super delicious, and they're out of Michigan, and just great. It says summer on the brain all year long. This beer is summer on the brain for sure. It's super refreshing. I love this beer, definitely. So I'm going to go ahead and give this a rating. It's super refreshing. It's kind of light on the stomach for a summer beer. It goes down pretty easy. It tastes fantastic, but it's not too sweet. A lot of shandies, like Market Garden, for example, Cleveland's Market Garden shandy. It's tasty, but it's real sweet. I can only have like 2 of them. I'm like, it's like drinking a pack of Skittles. This has got a nice beer taste to it. I don't know. It's beer, lemonade, blueberry, all in one. It's delicious. You should give it a shot. So, beer of the stream, the rating. I'm gonna go ahead and give that like a 9.0 for the rating, because that one's up there. That's one of my favorites. It's a little hot up here in my office. I'm not used to being upstairs. I'm never up here. So today we're going to talk about how and why crypto is leveraging banks. And there's no, specific documents out there that are saying this. This is all hearsay, which, by the way, this is not financial advice. I'm not a financial advisor. Everything I say is for educational and entertainment purposes. And we're just here hanging out, bullshitting, I'm not here trying to tell you what to do with your money, okay? Everything that I talk about is either educational, and you should be getting your own research after I point you in the right direction or wrong direction, whichever direction I point you, and you can do your own research. And I just do this for fun. I work a lot doing construction, so I do this as much as possible. Somebody came over my house the other day, and I didn't realize that anybody even really watched this channel, and he's like, "Man, what happened to your streams? I was watching them all the time." And he's a good friend of mine, so I felt obligated to come back and come back with a vengeance and teach some things. And I've learned a lot since the last time I was streaming. Things have happened in the crypto world. Things have happened in the stock world. Things have happened in my life. Things have probably happened in your life. It's been a few months, so just some interesting things that I've been noticing with my own personal bank account. And some friends' bank accounts, and just ads and things that I've been hearing. And I, in my belief, I think it's all, "Hey, buddy, what's going on? How you doing?" Thank you for the like, John Dice. So, when you're putting your money into crypto, okay, you can get, and we've talked about this in my past videos, check them out. There's also a link in the description for a Coinbase or a, I forget what the other one is, but there's 2 links. And if you use my links, then we both get free money. So that's cool, And I like free money, you like free money, so use my links, get free money. It's easy. I mean, no brainer, right? But, so, if you have your money in a bank account, okay? Now you could have, a traditional asterisk-free checking account. You could have a savings account. You could have a joint account. They have so many different kinds of accounts. And realistically, even in a savings account, when if you're specifically putting in your money for a long-term investment return on a savings, you're not going to get crap from the banks. You're really not. I mean, 1%, if that, you'd be lucky if you got 1%, maybe 3%. At the top number, 3%. And I don't think I've ever seen that. It's usually like 0.003 or 0.03%. Okay, so with crypto, we've learned that staking rewards, and depending on which wallet you use and which type of coin you own, you can get a different percentage yield. It's an APY. It's just as probably safe as holding the crypto if you have it on a hot wallet. Most hot wallets are going to require staking. Most staking is going to require hot wallet, I should say. There is some staking with the cold wallets, but it's very minimal. You get most of the good staking options on the hot wallet. So they're more risky a little bit, but there's got to be a risk to make the money. You know what I mean? If you're not doing the work, there's going to be a little risk. So hopefully I don't keep messing up my screen here when I'm doing that. I'm just playing with stuff. It's been a while since I see how this is going. Hello, peoples. Hello, peoples. Yeah. So but yeah, back to what I was saying. So I don't want to get into what bank that I have, but I've heard some banks that are offering some new things, and we're gonna try to talk about a few of them today, and we might look up a few, and then if you guys find any crypto leverages that you think that maybe the bank is offering these new offers in 2021 to try to compete with the crypto, the crypto APY and everything, because a lot of people are using crypto now and they're putting their money and their savings into crypto, and they're not putting, or in the stock market, and they're not putting it in the banks, because they're not. What are you doing? You're taking your cash, your physical cash, which is backed by, we don't know what it's backed by, but it's backed by something, right? Think about that one. Anyways, so we got our cash, and people are like, oh, crypto, it's this digital money, it's it's not safe, and blah 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 blah, and there's a lot of things out in the crypto market that are not safe, but when you go to the bank and you turn in your paycheck, how's that paycheck come? You probably get either direct deposit or a check, which you have to cash. So you get one piece of paper that's worth however much money. Okay, so it's not individual dollars that you get that you're turning into the bank. If you do get individual dollars, you get cash, paid cash, usually you got to put that into the bank, and then what do? They turn it to digital money, right? Then when you go back with your bank card, you can pull out some of that digital money and it comes back out cash. But while it's being stored, it is digital money. It's because there's more debt in circulation than there is actually cash. There's more, there's not a dollar for every dollar that's owed. Let's just put it that way. Because if there was, the inflation rate's already crazy. They just keep printing money and printing money and printing money. So, I don't know if you guys know anything about Bitcoin, but as Bitcoin has been released, and Satoshi Nakamoto, I think I said that right. Satoshi, not Sakoshi. Satoshi Nakamoto. I was thinking about that song. Yeah, Satoshi Nakamoto. So ever since he made Bitcoin, and the crew that did that, they made that so that way they could leverage inflation, because the rate of inflation, the rate at which you get raises, and the rate at which gas prices go up each year, the rate at which taxes go up each year, the rate at which pretty much anything you do, anything that we do, produce, recycle, anything is shoot, I lost it. Everything that we do is taxed, right? So when you got this inflation and it's out of your control, you want to try to get the best store of value out of all of the money that you own, right? You don't want to, inflation. For people who don't know, it's all those things that I just mentioned, and it really affects everyday life. You're paying $3 for a bottle of water that should be costing 99 cents or 50 cents. If you go to Giant Eagle and you get If you go to Giant Eagle and you get a Gatorade, they're 88 cents, right? 32 fluid ounces or whatever Gatorades are 88 cents. If you go over to Get Go, little walk away, and you get Gatorades, they're 2 for $3.75 or something like that. You know, I get that they sell, they're making a selling point there, but you're paying the tax on that, and so it's always better to go get the not cold 88 cents Gatorades than it is to go get the 2 for $3.25, because you're paying, double the price just for the convenience of it being cold, really. So you get all these different places and these different things, and they're charging, when you're paying 30%, 29.99% interest, I think is the cap out interest rate. I'm not really sure. I can maybe look that up. Let's see here. I'm going to look up the max United States interest. Sorry. I just want to know. I've always talked about this, so I've never actually looked it up myself. Okay, so this says 8% per year, what I'm looking at, but that's not right, because I know I paid more than that on my credit card. I'm looking for something, sorry. I was just curious to know, like, what the highest interest rate allowed by law is. So I think it's like 29.99%, but I don't need to look for it all day. My point is there's that interest rate goes up. So then any company can charge up to that amount of interest, So companies and loan places and stuff like that. So when you store your money that you're working for every day, the value of a dollar right now, because we look at charts and we look at stocks and we look at assets and we look at crypto, US dollar, is going down in value right now because they keep printing more money, and the inflation is going up at the same time. So it's really, if you're making minimum wage right now, $8.75 or something like that, there's no way you can afford to live in an apartment by yourself and drive and buy food and all those things. And then what are you forced to do? You're forced to be on government help, because you just can't afford to pay for it. And the rate of which all of those things that I just talked about, I know I kind of rambled on about a lot of different things, but the rate of which all those things change has gone so far past, the you and I user, the middle class person or the lower class person who's trying to, have a savings account, and your car breaks down, or you're trying to run a business, or you're trying to save for your kids' college fund, or maybe you just have a hobby that costs a little bit on the side, and you should definitely do that hobby because you should enjoy life as much as possible. So are you gonna not enjoy that hobby because it costs a little bit of money? No, definitely not. You just have to budget and do it when you can. So, but it's really hard. I definitely think there's a fine line between people who reach outside the box and want something and go for it, and then there's also people who want something but they wanted to hand it to them, and there's it's hard to get everything, but what I know for sure, when I store my money, I want to make sure that I'm getting the best annual percentage interest rate per year back on any money that I have in my savings because of how hard I work, at home, at work, helping other people, doing streaming when I can, and I have lots and lots and lots and lots of hobbies, so I'm always busy, and that's a good thing. Sorry, I'm just flipping through some charts here. So one of the things I want to talk about was Huntington is now offering a $500 0% interest loan through their checking account or whatever, and it's always available. It's like backup money, right? Reserve money. And what that allows you to do is you can take a loan up to $500 anytime you need it, anytime you want, for anything. They don't care. And it's rated by like how much money you deposit in your account on a monthly basis. So they average it out and they'll give you so much. This is a newer thing, so that's why I want to talk about this. So basically, gold's getting wrecked right now. By the way, this is gold. But basically, if you pay it on time, which is one payment a month at $166 a month for 3 months, if you pay that on time, they're charging you 0% interest, and you're getting a free well, really for $500 or $1,000 or $250 or whatever it is that your account will allow. And that's great, But where did that come from? All of a sudden, At the same time, Huntington also rolled out, or within like a few months of that, Huntington also rolled out, what was that thing called? The $50 overdraft consignment or whatever. So we're like, if you overdraft up to $50, if it's $49, they won't charge you no fees, and you have, I think, 2 months to pay that back or something, or 30 days to pay that back, up to $49 or $50. After $50, you still have 24 hours to pay it back. So if you charge your account negative $100, you have 24 hours to pay it back. But if you charge your account negative $49, you have like 30 or 60 days to pay it back, which is great. They should give you a little leeway, especially when you're overdrafting $6 at a $5 limit, and then they're hitting you with a $35 fee plus $7 a day every day after that. You can't pay it. That's why these banks have all this money now. But people are wising up, and they're like, whoa, these banks have all this money. They're really not doing anything for me. They're not giving me good interest rates. They're not being, very fair with their fees and fines. I actually went to the bank. I still have to get this taken care of, but I went to the bank for my construction business, and I was getting this charge on my account every month. I think I'm still getting it, actually. Every month since I've opened the business for years. 4 years, something like that. And it's a $15 charge for a processing fee. I'm like, okay. So I opted out of the paper mailing, so that way I wouldn't have to get charged this fee, right? And it was like $3.50 or something, the fee for the mail. I opted out of that. That's what they told me to do. I wouldn't have to pay the $3.50 fee anymore. Didn't even think about it. I've been getting this $15 fee now, and it's for a online processing fee. They charged me 5 times the price for an email an email account summary instead of a paper account summary. Now, I'm very green. I'm all about recycling, cleaning up trash, all that stuff, and I'd rather just get the email. And I usually go on the website at the end of the year. I do my stuff or whatever. But, I went in and asked them about this fee, and nobody could seriously. There was a manager. There was the one lady who I was working with, the tenant. And then she got a manager. Another manager came over, and then they were all three, talking, and they basically were like, we don't know why you're getting charged this fee. We don't know who's charging we don't know where it's coming from. Based off my account, it's supposed to be a free account. under so many transactions, like 150 transactions a month. I don't do that many transactions a month. Shouldn't be getting charged no fee. And yeah, so they wanted me to schedule an appointment with a special person so they could sit down with me and go over, like, just me going into the bank. They couldn't answer. They could not, there was like 3 or 4 people there that could not answer why I was getting charged all this money. I couldn't believe it. I still have to deal with that. But, that's the kind of stuff you deal with when you let somebody else deal with your assets instead of you dealing with your assets. So, a lot of the cryptos that I have, or my friends have, or family has, or, people that I learn from, they all have crypto staking that is going to bring in 5% APY, 5.0, 14% APY, 7% APY. You're getting crap at the banks, okay? And I think they realize now, or they're starting to realize, that because of people like you and I putting our money into crypto to get the better annual percentage rating back per year on our savings, that we're not holding so much of our cash fund in the banks. That's less trust that the people have in the banks, in the centralized system. And it really is just going to it's going to be interesting over the next couple years to see, as crypto becomes, we've gone through 2 major bull markets recently. And I'm going to do another beer review. It's going to be a special episode tonight. But yeah, so with everything that's going on with the banks, they're just I think they're starting to lose capital, which is trust in the people. You got a lot of newer, younger generations coming in right now that are traders, that are learning about the markets, that are wanting to invest in their future long term at a young age. And when you're going to get like a traditional IRA, I heard the other day that there's and for those that you don't know what an IRA is, it's a retirement account. There's a couple different kinds of IRA. There's 2 different kinds of IRA, I believe. One you have to pay for, one's free. And it's basically a retirement account. So you can actually take your crypto or your stocks, and if you come up on a big amount of money, instead of selling, you could actually get a IRA account, open that, and you can fill out this 1035 or something form. I forget what it is. It's a 10 something form, but you fill out this form, and you can actually, before you sell your asset, you have to do this before you sell. But you can take, say you bought Bitcoin at $5, and then now it's like 60,000, and you used to own it. So instead of selling it, what you could do is you could open an IRA account, and you could transfer that wealth, that property, from your personal account to an IRA account. And with that, you won't pay taxes on that until you retire. So when you go to withdraw that money, and Bitcoin goes up 200% a year. So even if I was learning the other day that they're having crypto IRA accounts. They're new, and I might check that out. But it's probably a decentralized, a DeFi retirement account. So the liquidity of proof of stake, or the liquidity of proof of liquidity, or what, I don't know how it's run, but I'm sure there would be a decentralized a DeFi protocol that would run the IRA and split it up for everybody, but I like having control. I like having control over, if I want to get, if I got a little bit extra money sitting around and I want to get a 7% yield on that annually, I'm gonna put that money into one of my wallets or one of my staking accounts and get whatever the best percentage yield is that I can get on that, because I love passive income. The idea of it is amazing. So it's not like you shouldn't go to work, but it's nice to make money while you're at work, right? I'm gonna do another beer of the stream. This is gold. Excuse me. This is the gold chart. So the ticker, which is in the top left-hand corner up here, symbol search. The ticker means like the symbol that stands for the asset that you're talking about. So bonds or commodities or dollar, you know, crypto or whatever. So we're going to look at gold to the US dollar. And, you know, gold is what they call a commodity. Oh boy. So we're looking at the 4-hour time scale right here. See the 4-hour? This is the time scale. I know I talk about this stuff a lot, but just so everybody gets familiar with it, as I do it, I'll try to explain, you know. The 4-hour up here is the time scale I'm looking at. And usually for trades that I'm making, I'm using the daily and the 4-hour. So if we go over here and look at horizontal ray on the second icon down and about the 8th down here, that's one of my favorites. I'll actually favorite down horizontal ray. So basically that's a line, you click it, it shoots across the screen. You can make it longer or shorter. You just don't have to draw the whole line, it stays pretty straight. So looking at gold here, you know, this 4-hour chart here goes back to actually, well, it goes back quite a long time. All right, January 2018 it goes to, okay? That's how far this chart goes. So, as you can see, you got some composite operator stuff going on here, accumulation, and it's pretty much had a pretty steady uptrend. Oops. Been in a pretty steady uptrend since you know, like May 2019, and you know, I'm gonna extend this here. Ooh, that's nice looking. Nice trend line. See, nice upwards trend line. Very bullish. You know, for the past few years on gold, you know, we definitely had some sell-offs, but overall it's been you know, pretty bullish. And then after this peak high that we had on August 7th, 2020, we just began selling off. We began making this downwards trend, you know, and now that we are falling below this critical point here in history at I'd say you got a little zone here, and we just fell below it, and that's not looking good on gold. See all these little highs in the right here, and then we had this markup before the sell-off. All these little highs right here is what you call like an inflection point. This was, you know, this 1735 roughly has been regarded as resistance 1, 2, 3, 4, 5, 6 times right here in history before it broke through it. And when it did break through it, it was very strong on June 26, 2020. It didn't even come down to fully backtest 1738. But if you go from like the 1738 up to this high at 1762 right here, there's a little range here. And you can see that we had this big wick fall below that range, you know, and It looks like it's staying above. Right now, this high from March 9th, 2020. But I don't know, guys. It's not looking so hot. It definitely is hitting a reversal and a downtrend. I draw another trend line here, it's definitely in downwards trend. So we need to stay above 1733 here, or 1734, and until you get back above 1829, I at least see another double bottom here, because you had a double bottom and you had this small rally and you began selling off again. So there's just a lot of potential for the downside here. I would just try to stay away from gold for right now. Sorry, I'm thirsty. It's hot up here. Doing all this talking makes your throat dry. It really does. Excuse me. So, but I wanted to just take a little look at the chart. But so, like with gold, gold is supposed to be what backs the US dollar. So if gold's going down and Bitcoin's going up and the United States dollar is down in value from $1, where do you want to store your money? Think about it, we're going to look at a lot of assets are down today, a lot of altcoins, which is good. What happens when assets are down in value? They go on sale, they're at a cheaper price. Might be some good entries. I made a trade the other day that I would like to go over. This is ICP to USD. Insane cloud posse, dude. No, just kidding. Juggalos and juggalettes. So this is Internet Coin Protocol. Okay. Now, this coin here was listed on Coinbase, had its ICO around May 10th or 11th this year. And when it came out on Coinbase, this thing was booming, all right? It was up at, this trading view chart says it has a high of, $491. On the Coinbase chart, it says 750. I don't know. Sometimes they fluctuate a little bit. And I believe what's going on right here, this is, if you use your tokenomics, this is a low cap market, low cap coin. It's probably around it's probably medium cap, actually, I would say. It's like 2 billion right now. There was just a huge sell-off after the ICO, initial coin offering. And, this is not an asset that I'm myself, I'm not super long-term on, as far as, the tokenomics of what the functionality is or the utility is of the coin. No, I haven't done, that's because I haven't done too much research on this, to be honest with you. But this one is on Coinbase, so that always helps, if it's on Coinbase. They don't list every asset in the world, so I usually like some of the assets on Coinbase. And it just dropped off. When Bitcoin was selling off, this year, and it was going bearish for a while, the past 2-3 months. You know, a lot of these altcoins got wrecked, and this was one of them. When that happens, you know, obviously if you bought in high, you're going to want to hold. You don't want, if you bought in, you know, somewhere up here, just hold on to it, and you'll eventually be able to, you know, probably get some of your money back. But you have to, it's a waiting game at that point, you know. You might wait 2 years just to get your money back, but you might not, you know, you won't lose it. Just try to always make sure you're buying low, selling high, or you know, unless you're playing bearish. You know, the bulls, there's bullish and bearish, and the bulls are the buyers and the bears are the sellers, right? We know that about both markets, the crypto market and the stock market. So, you know, if you're betting downwards on something like this, you know, more power to you. I'm not really a betting downwards kind of guy. But what's going on right now, in my opinion, on this, is that there's classic Wyckoff accumulation here. You know, we got lots of small candles, and it's very choppy, and you came down and you double bottomed right here. At $28. You know, and at $28, yeah. You had a double bottom at $28. It looks like you made a slightly lower low, which, you know, is not usually something that I would play on. You know, this could sell off a little bit more and come back to make a higher low than July 20th, 2021. Your low was $28, and I guess you do have the same low, $28. Okay, so look, there's a double bottom with, you know, let's see, let's put the double bottom there. We're gonna go over here on the left of the trading view screen, and we're gonna look for the elliptical. I think it's called elliptical. Hold on here. That's not it. Circles. Wow. Where is it at? There it is. My bad. All right, we want to click the curve icon. Okay, so you're gonna go over to the text on the left, and then the curve icon right there. Oh, and we got one bottom. Oh, come on, work with me here. Work with me a little bit, guy. Where are we at? We were at the paintbrush. Arc. Curve. Boom. Alright, there we go. Ha! Figured it out. And we can right click on the curve, hit clone, and now we have two. Okay, there we go. I'm not that terrible. A little terrible. There we go. One low, second low, and then you started making consecutive higher lows and higher highs after that, right? After a huge sell-off. It looks like we might have a pattern here. Let's see. So Maybe no pattern. Still working on the harmonics. There are a lot to remember. There's a lot of numbers, a lot of digits in the Fibonacci sequence, but we can do that. We can just run the Fibonacci from the high to the low and just check out some targets that way. So we go over to the fib retracement over here and go from the, you want to go from the actual candle high, not the wick high, and from that swing high to the lowest low right there. Okay, so you sold off, you came up, you hit the 382, sold off again, rallied at the 786, had about 1, 2, 3 touches there, sold off. And like I said, this is where we're in that Wyckoff accumulation, you know. So with these double bottoms here, you know, I would be looking left at $59. What is it? Let me see. Let me zoom in on this. If we're looking left at the most recent all-time high, right, or the most recent high, right? We can just pick out targets from history. I didn't have very much money at the time, and I'm just compounding gains. So I only had enough money to buy like a coin or two of this, and I got in at like $38. Okay, so I took some profits from another trade and put it into this trade, and we had this low at $28. So after it made the second low, I put my money in, you know, right around here, around August 7th. See, it's no. Right here, right after this low, this higher low, and then you had another higher low. When that other higher low came in, that third higher low, that's when I grabbed a couple, like 1.5 of these. All right, not too much, but for like 50, 60 bucks, the potential of the upside is crazy on this. Okay, so like your first target could be, if one were to size this up. Now what you did was you broke through this inflection point at $59, and now you're back testing it. You spring, back test to spring, okay? And I think you're gonna see a huge rally. This could maybe turn into a giant cup and handle. You might just, you know, rally a little and then sell off and consolidate more. We don't know, but you know, if one was maybe gonna size up like a good first target from the current area, you know, you could go maybe grab this horizontal ray and slap that baby like boom right there. Fire at 126, you know? So even if I bought one coin at $38 and then it rallied up to the next high, which we've seen what happened in history, straight up, straight down, straight up, straight down, straight up, straight down. You know, it actually did a whole lot of straight down, but it did. It went up first and then down, went up first and then down. It just went down further. It made lower lows and lower highs. So then we rallied and we made more lower lows and lower highs, sold off for a while, and we made this triple bottom here with consecutive higher lows. That's a good spot for, you know, maybe a long. With if you look at the tokenomics, I haven't gone too far into this one, but I know it's got a low market cap, and you know, so if it's at 2 billion, for it wouldn't take as much money to get to 20 billion as it's going to get to 200 billion, right? So you know, it could definitely maybe see 125 again. Maybe it consolidates a little more sideways, you know, above $62, and then maybe it says $62.85 right now, so maybe it consolidates a little bit above $62, and then it rallies up to 126. You know, as long as it's making consecutive higher lows, You know, I'd say this is pretty sweet right here, you know? And then your second target could be, if you were, you know, being conservative here, go from the candle high at 209, you know? That's a great potential upside. Could grab a long position. So one could take a set of stop loss at like $25 because you don't want to sell, or what is that? Yeah, like probably like $25. Hold on here. And then sorry, I'm still learning how to get better with drawing all this stuff, so just bear with me. All right, so if you're looking at this little box I just drew, you know, downside is the red. You know what I mean? Your potential loss is the red, and your upside is you know 2 or 3 times that size. So then if I clone another one and set another one at the same spot, and then you set your second target, boom. See this, guys? You know, there's different ways to do this, and you know, we should be looking at the RSI too, the relative strength index. Why do we have 2 now? Didn't even have 1. Now I have 2. Okay, so you were a little overbought on the RSI and you sold off, but you're sitting above 60 right now. And if you're above 60 on the RSI, that's in the bullish control zone. So this definitely is. This is definitely looking sweet here. Let me see here. Close this down. That's better. So, and then maybe your third target, if you were going to have a third target, could be okay. So then maybe your third target maybe could be like $347, $343, somewhere around there. So if one was going to buy in the accumulation phase down here, you know, you could lose, you know, as a risk to reward, it's about 33% loss to the upside of 67% upside. 150% upside. 150.37. So, you know, that's how one could look at ICP. That's how I looked at it. Either way, it's lower risk, higher reward areas. You know, it just looks like a pretty good coin. And we were talking earlier about, you know, crypto leveraging banks and how, oh, this is Castor Maritime. I was looking at this for my buddy the other day. I think it's an alternate bat. I'm working on the harmonics, like I said. I want to be announcing the harmonics before I know them, you know. But the harmonics are patterns that are seen over history, you know, repetitively, and so you can, you know how to read the harmonics correctly. You could watch it for X, A, B, C, and then you buy a D, and your first target would be C, then A, and or it would be 556, and then 1044, and then almost up here at $20, maybe like $19 on CTRM, Castor Maritime. I was looking at this for my buddy the other day, and it did make a higher low from X to D. So, but yeah, so the banks, you know, with them offering these loans, these lower interest rates, they're trying to keep people to have their, you know, they want people to keep their money in the bank. So, with that being said, if you want to get the most return out of, you know, your savings, you want to try to get the highest annual percentage yield, you know. So just look around a little bit, check out some places, some wallets, you know, check out some different banks, see what the highest, you know, savings account APY you can get is at a bank, and then look at the highest crypto APY you can get, and then you choose. Tell me which one you want, you know, leave them in the comments. So I'm going to do another beer of the stream, just because I haven't streamed in a while. And I'm going to give this one right off the bat an 8.5. And we're going to go with a different color this time, because I like to change colors sometimes. Let's go blue. Blue! Oh, we're not going to be able to see the blue. That's no good. Okay, this one's called Narragansett. Narragansett. That's hard to say, but it is brewed by Made on Honor. Narragansett presents Dell's Shandy. Great grandfather wins from early back in the leagues. Okay, so this is a shandy, and I guess it's, I don't know, Dell's, and it's made by great grandfather Delusha, or that's where the recipe came from. So, but yeah, it's Dell's. Dell's brews it. DELS. It's pretty tasty. It's also a shandy. It's a lemonade shandy, and it's a 4.7 alcohol per volume. Not too bad. It's pretty refreshing. It says refreshingly different on the can. It actually is really refreshingly different. It's pretty tasty. Good summer beer. All right. So that, yeah, there it goes. It updated. So I'll show you the can here. It's Narragansett Dell's Shandy. It's refreshingly different, and it's refreshingly different. Hey, I'm gonna run and grab a cold one real quick because it's hot up here. I'm gonna throw this bottle of water in the fridge. I'll be back in like 2 seconds. Hold on, guys. All right. We're gonna look at some more assets here. I know everybody's probably excited that I'm back here. We can get looking at some coins. Maybe let's take a Bitcoin look at Bitcoin, the macro, right? Maybe we'll look at some stocks today too. I don't do that enough. Some of my buddies only like stocks; they don't like crypto. So maybe we'll look at a couple stocks today. Oh man, my cat just shit himself. Damn cat. Anyways, so Bitcoin's looking pretty good right now. Just back tested the 200-day moving average as support here. We just had this great bullish engulfing candle on August 9th, 2021 from a rally from about 43K up to 46,000. We got this doji candle here, which is this red plus looking candle. This is called a doji. We got a green doji candle, and I think this is a hammer doji. I'll have to ask. You know what? We'll just look it up. Yeah, because we could do that. Doji candle. A doji candlestick forms when a security's open and close are virtually equal for the given time period, and generally signals a reversal pattern for the technical and analyst. In Japanese, doji means blunder or by mistake, referring to the rarity of having the open and close price be exactly the same. So there's some pictures of some dojis here. There's gravestone doji, long leg doji, dragonfly doji, right? If you're looking at this image here on my right. Get out of here with that crap. All right, yeah, doji. So what we got a looks like if you look at this red candle and then this green candle, then this green candle, then this red candle, those are dojis, right? And looks like a dragonfly doji. Not like doji coin. Looks like we got like a dragonfly doji going on there. And these little candles usually signal reversals, you know, whether it's a minor sell-off, major sell-off, or a major to, you know, turn to the upside or downside. They usually indicate reversals. So, you know, we had this huge bullish engulfing candle reversed, and we had this little selling off. So when that reversal happened, it painted a red doji. Okay, and then you had a bullish doji, and another bullish doji, and then now we're forming a red doji, but we're above the 200-day moving average now, so that's really good. And if you look back in history, we're above this critical high from May 18th, 2021. Ooh, no, this high. Sorry. See that? That was a really tough point to get above there. And so was this. So what happened here? You had your huge sell-off, markdown in your price. You had some downwards consolidation. You ended up making one low, and then a second low, but a higher low, right? So you've seen support at like 28K, you stayed above it, made your first low, you rallied a little bit, sold off again, but you made a higher low. That's bullish, okay? That's bullish sentiment. So, and your first price target would have been like 35. Second price target could have been like 37, and then like 40,000. We had after this double bottom, one bottom, a second bottom, higher low. We had a spring. You broke through that high of like 37K or so. 38K, I'm sorry. And then you came down, you back tested it as support. So what was once resistance is now support. And it's that spring, back test to spring that I always talk about. And you know, right after a double bottom, these are good signs here. So when Bitcoin's doing good, even if you don't own Bitcoin, the crypto market's usually doing pretty good, you know. So from here, I think our next target is there's nothing till 51K, you know, 51,000. So we need to get above that, 51,199, 51,357. We need to get above that, you know. We could either go up and test that as resistance, or we're gonna go up and test that as support. Right here, we could maybe sell off a little bit, make a higher low, then break through and back test this as a spring, and then you might rally again. Or you could come up and right here where you see this line, if we test this as resistance, we might come down and consolidate more. But as long as we stay above 42K, we're looking pretty bullish from here. You know, as long as you stay above 42,000, I think you're looking pretty good. So even if you came back down, if you show this this here at right here, this hump, this first fake hump I drew, if you show this 51K as resistance, then you sell off. You know, as long as you don't sell off between 42, you know, below 42,000, you're still looking really bullish. So, you know, that's Bitcoin. So that's good. So what does that mean for us? Well, if Bitcoin's rallying, all coins are probably rallying. So that means that there's money to be made. Bitcoin's rallying and Ethereum's rallying. So that's money to be made. And if it maybe sells off a little bit and consolidates, that means it goes on sale and you can buy more at a better price. So, you know, either way, looking good, right? I've been live now for an hour and 12 minutes. Let's look at Cardano. ADA. This is ADA. If you're looking at the ticker up here, it's ADA USD. That's ADA to US dollar. Cardano. US dollar. It's the comparison of, you know. So straight up, straight down, straight up, straight down. Very choppy on the 4 hour. Dang. Yeah, so I mean, you had your all-time high on Cardano is like 232. It's like 249. Yeah, 249. Okay. Cardano is one of the projects that I'm super bullish on, and I really like this project. They have we did a whole episode on the Africa deal that they got going on, and the best way to describe Cardano is like it's done all this work right here, all this consolidation, accumulation, these first highs and everything. It's done all that without really having any kind of real use case yet. Like all of the stuff Cardano is doing is happening now, and there's updates coming out for their smart contracts, their DeFi contracts, and the only thing they really have available to the user right now is their staking, and their staking is fantastic. It's just great. So they have really good APY on their staking, and they're about to release their smart contracts, and when they list Africa and Ethiopia on here, it's like 5 million people they're going to have added to the financial and educational system, so that's more, that'll be a whole bunch of money added right to this portfolio here just from those people, and they're going to probably build businesses and do things as they get to grow as like a third world country. They'll be able to adapt and get better medicine and maybe build some things or whatever they want to do, so right now I think Cardano's at a really good point. You made one low and then a second low with a slightly higher low, which was a slightly higher low, and one, two. Okay, so you made one low and then you made a higher low, so it's a double bottom, right? And Cardano has got very good staking rewards, like I said. So like if I get a little bit of profit from say like Internet Computer Protocol, if I come up on like 50 or 60 bucks on their profit, where am I going to put that? Well, you can put it in a stable coin, if that's what you want to do, and you don't have much fluctuation in price from there. Sometimes you get good interest rates for holding stable coins, so you can take your profit and put it in there. I take some of my profit and I put it in Cardano for a long-term trade, just reaccumulating more coin over and over is basically I would, and then you get good staking rewards from that, So Cardano's low here was at about $1. There's a nice ice line here at $1. It seems to not ever want to fall below $1. But from $1 to $2, you double your money if you buy at $1. It hit 249, so maybe up here somewhere. I think when it gets back up to there, and you could double your money. So it kind of looks like a dragon, maybe. This is the head of the dragon, the ears, kind of the body, and it kind of just formed the tail. And I think the projection of the dragon, if this is a dragon, it looks like a dragon to me. I'm working on getting down all the digits for this. All right, so from this swing low to the swing high, you rallied, and you sold off, you know, it's got to be at least a 23% retrace to be a valid retracement, right? So it sold off 23% retrace, and you came up and rallied above the 50% retracement, sold off again to the 236, rallied again up to the 618, seen it as resistance, and then you sold off down here to June 22nd low of like $1.60. No, I don't like that. Those letters are right in my way. Low is $1.08. $1.08, whatever. Okay. So anyways, you know, with you coming up and touching the 618, that's the golden means ratio. You showed that as resistance. So, you know, your first price targets would be like the 618 up here, and then your second price target would probably be here at 249, and your third price target would be, I'm pretty sure the Dragons is this 1618 up here at 341. If you get to 341, your next psychological resistance would be like $5. I know that's crazy, but you could maybe rally, and then you come down. Maybe if you test this 618 as support, you could run up to you know, this 244 or 249 area, and hopefully, you know, you really would like to break through this 249 area and then back test that as support before running to all-time highs. You know, you could sell off here, and then you could consolidate for a little while, you know, before going back testing this and going to higher prices. Or you know, you might sell off here. You know, you could have like a double top, one top, second top, and you could sell off here. But down here at like $1 is low risk, high reward areas, you know? So that's where you want to be looking for a trade. Tron. TRX USD was at like 7 cents today. One bottom, second bottom. One bottom. Second bottom. Oh. Second bottom with a slightly higher low, and you're above that critical point from history, the high from March 23rd, 2021. March 20th, 2021. You're above that, which is really good. And it looks like you just came and tested it as support. So now is where you could see a huge rally on Tron. Okay, within the next few weeks here, we could definitely, maybe a few months, few weeks, maybe about a month and a half, we could definitely see, you know, within a month and a half, a huge rally on Tron to the upside, because it's just straight up from there, you know? There's hardly anything in the way right here. So, you know, I think if you get above the high, you just back test and sprung this high right here at 6 cents, 0.68 cents. You sprung right here. After a double bottom, slightly higher low, sprung, back test to spring. You're testing that resistance as support. Now you're ready to rally, you know, on Tron. There we go. I definitely see you running up to oops. Definitely see you running up to you know, from where you're at now at like 7 cents, I definitely see you running up to hit 9 cents. As long as you break through 9 cents, I mean, there's nothing in your way until like 13 cents. Right here. So, you know, if one were to take a trade somewhere down here, your first target would be 9 cents, this green line, and then if that breaks that, your next target would be about 13 cents on Tron. Glad to be back with you guys. I know I took a little break. It's been crazy at work. I got a baby on the way, and I've been doing stocks and just working like super long days at this job by myself, so it kind of sucks balls, you know, but I'm making it work. I'm almost done with the job. It looks great. I just got to get through it, so I'll have more time for you guys here soon, and you know, as I get better, I'm always reading books or looking at charts, or I'm always practicing the skills of trading, you know. So as I get better, I'll be able to share more content with you guys, and you know, it's really exciting when you get into the markets and you put $100 in, and then over a few years you turn that $100 into life-changing money. Like, I started with $100 or whatever. Maybe your first investment was $100. Hey, click my link and for your first you know, investment in a Coinbase, or I forget what the other one is, but I got my referral links down in the description, so check them out. Dang. New cipher was down here at, like, I was eyeballing this one, you know, one low, second low. It didn't really have a double bottom, but you know, so much to that this is down here. But you know, this was one I've been eyeballing for a little bit, and it looks like you're kind of in an accumulation phase here between like 22 and 26 cents, and it looks like you just spring and then back tested it. So you broke right through it, and now it looks like you're back testing it as support on New Cipher. And look at the tremendous upside on New Cipher, guys. $14.13. What is the high? From February 21st, the high is $1.03. So, you know, down here at like 26 cents, it's pretty low value areas. It looks like you're finally getting above this support at this inflection point from history, and you sprung past it, and now you're back testing the spring again on New Cipher. So that's it's probably, you know, I wouldn't say, hey, go buy it right now, because that's not my job. I'm not a financial advisor, but you know, I mean, what's happened at this asset at these levels before in history? Huge markups, right? Downward consolidation, distribution, and then you're consolidating now. You're making consecutive higher highs and higher lows. You're back testing an old support from history, at 24 cents, 25 cents. And you know, your first target is probably like 50 cents. 39 cents, then 50 cents. First target, 39 cents right there. So if it breaks 39 cents, you're going to 50 cents, 51 cents. And that's double your money right there, you know, just from those two targets. If you bought in at, 25 cents, 26 cents right now, and you just waited till the second target, you doubled your money. That's great. Didn't have to do anything. You know? Maybe a stop loss, like just below this low here at like 14 cents. And your first target could be something like that. You know, first target, second target, and then your third target will probably be this where it gets real choppy up here, guys. Right about there. Yeah. If you know, if you're looking for a trade, check it out. Check out the market cap. Look at the tokenomics of it. You know, you just, sometimes these plays play out, right? You know, when they're at value areas, you got to be ready at value areas. You can't be like, it's so hard. I feel like every time I have extra money, the market is up, and I don't. It's good when it's up because I'm up money, but like when it's down, I usually don't have a lot of extra money to play with. It's nice when I do have extra personal money though, because then when everything's down, it goes on sale, right? And then your potential for the upside is way better. So, you know, one could maybe take, if you were going to take a trade around here at between 22 and 26 cents, maybe your first target's 39, then 50, then, like 69 cents. And, you know, you can maybe paint a fourth target up here at 87 cents if you really wanted to. You know, if you were going to play along on this one, you know, if you're going to hold this long term, you know, get up there to like 86 cents from 21 cents. That's like 4 times your money. It's great. Who wouldn't want to do that? A lot of assets are looking like this, guys. V-Chain, V-Chain's looking great if you already own it. I mean, it's at low risk areas. Okay, same thing at V-Chain. Low. It made a low and then a higher low here above this point in history, and you got a spring, back test a spring, just like all the other assets we've pretty much looked at today, at around 9 cents. And your first target's probably going to be at 13 cents. And then your second target's going to be back up here at 24 cents. So pretty much straight up, straight down. And, oh wait, hold on, I'm sorry. Did I say 13? Yeah, like 13 cents is going to be your probably about your, between 13 and 15 is going to be your first target for V-Chain. V-Chain, very good tokenomics. Long-term project capabilities is great. The use case is it's awesome. And the staking rewards, you get VETHO tokens at 1 a day, but I don't know, like VETHO tokens are only valuable to you if you need to trade your V-Chain or use your V-Chain. They're valuable to people who have not held their V-Chain long enough to accumulate what they need to trade it. So like, if you want to trade, say you put, say you buy this V chain now, hypothetically at like 9 cents, you cannot trade that even if you come up on a bunch of money for like 21 days or something like that. Depending on which platform you're on. But most wallets, you have to spend, the network fee of like 21 Vitho tokens in order to make the trade. So what's that mean? Well, that means if you buy $1,000 worth of VeChain token at 9 cents, you got to wait 21 days to trade it, which is not bad for long-term traders. That's no big deal. I did that, and I have accumulated a bunch of Vitho tokens in case I need to trade them. But I'm just a long-term holder, of VeChain. So I'm just accumulating Vitho tokens anyways. So it depends on what you want to do with it. If you want to buy it today and trade it tomorrow, maybe not VeChain. But if you want a long-term trade at valued areas and you just don't got to worry about it, and this is going to be looking good in the future, probably VeChain. So, just think about that. I use a couple different types of wallets. There's Atomic Wallet, there's Coinbase Pro, there's exchanges, hot exchanges online where you're just trading pairs. It depends on what you want to do. We go over a little bit. If you have any questions about any of that stuff, drop it in the comments below. Or simply shoot me a message on stream. If there's any assets that you guys want me to check out, feel free to holler and I'll look at it for you. I know some people are into stocks, some people are into commodities, some people are into crypto. I don't have an issue looking in, and I can at least give you my best opinion on the chart. What were the Doji coins doing? Everybody loves the Doji coin, right? Not me. Just kidding. I really don't like the Doji coin at all. Kind of looks similar to a lot of the other assets, right? One low, a second low, slightly higher low. Dogecoin just went nuts, guys, up to 73 cents. And, I was buying this asset down here at like 0.008 cents. I sold it. And I made a couple bucks, and I said I would never buy it again, and I'm sticking to that. So I did buy Doji before I knew about what tokenomics were, and before I knew about crypto. Really? I was like it was like my introduction to crypto. Like, Doji's like the weed of crypto, right? Like, oh, it's the gateway crypto. So, but yeah, I mean, Dogecoin, it's not really my coin. I would say it's at lower risk areas, but the way that this coin builds liquidity and just adds coin each year, like roughly about 5 billion tokens, I believe. It's not for me. As soon as it's not traded in enough volume, it's just going to go back down to like 0.008 cents, and that's where I'll buy it again if I ever did, was down here, Unless it comes back down here, I ain't never going to buy it again. Which it could sell off down to that point. I mean, it might have a little rally here, but there's better assets out there. Bitcoin Cash, looking pretty similar. One low, a second low, around 587, and the potential upside is like 770 for the first target. Right here at this resistance point. And then your second target probably be like, bang. Like 1208, and then your third target would be at like 1599. And we can go ahead and do the same thing here with the long position. Stop loss probably below, a little bit below this low from April or July 20th, 2021. And I might want to, there we go, something like that. Second target, bang, clone, third target, bang, bang. Okay, Bitcoin Cash, that's how one could size it up. You know, you don't really, the asset doesn't really have much value below $367, you know? So anywhere between like 367 and, I mean, you could probably still get in right now and be all right in like, what are we at today? We're at like 580. So anywhere between like, 395 and like 580 right here. Obviously it's already marked up a little bit from the lowest low. These are low risk, high reward areas, first target, second target, third target. This is like double your money, triple your money, quadruple or more, It's great. It's great. It doesn't always work, it doesn't always play out. That's why you have stop losses, or, if you're a long-term holder, maybe you don't care if you come down a little bit, because if you just wait long-term, you usually come up on money. So, definitely want to buy low, sell high. Let's take a look at DigiByte. DigiByte looked like it had a nice rally over the past few days here. From like July 19th or 20th, we've been on a nice rally with VeChain, and we had the classic old one low, one bottom, second bottom, whoop, right here with a slightly higher low, super bullish. And then this is like a buying point right here, the second low, because it's confirmation of that low. It's slightly higher, so it's strong, it's bullish. You had your RSI around when it reversed. RSI was around 53, and as it began to reverse here, you got above 60, which is the bullish control zone, and look, it took off, overbought, sold off, overbought, sold off, overbought, sold off. But it's making lower lows and higher highs. It's hidden bullish divergence going on right now. And it's just looking really, really fantastic. It's making higher lows with lower levels of relative strength. Okay, looking great on DigiByte. All right, guys. Well, I had a fun time streaming with you today. Hit that like bell, that sub bell, that subscribe. And if you have any questions or comments, feel free to leave them in the comments or chat. And I'm going to try to get with you guys more often to stream, okay? So I'll be wrapping up this job here soon, and I'll have some more home time. I'm going to try to be here streaming like every week on like Thursday and Friday for sure coming up. And I'm going to try to like get on a regular schedule or something. I got to get here, I got to be here for you guys and and it helps me out being here because I'm looking at charts. I'm making time for this. So, and I really like to learn. So, thank you guys for coming out. Make sure you like the stream, share it, tell your friends about me. If you have any questions or you want me to check out an asset, feel free to ask, and we'll see what we can do. And just keep trading and keep your confidence going. And